Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. It's 8:05. Today we'll be talking about a recipe for a silver squeeze as measured by lease rates, and we'll be touching on a little bit of CPI stuff as well. Anyway, let's start with the markets. 10-year yields are down 2. The dollar is up 10. The S&P 500 is up 16. The Nasdaq is up 136. The VIX is down 20. Gold is 43.17, down 21, near its lows. Silver also near its lows, 65.82, after being up substantively before. All the moves right now are pre-data jitters. Data doesn't matter anymore, just an opportunity for entry or exit. Uh, Copper, 531, down 2 cents. WTI down 71 cents. Natural gas up 8, a little bit of an echo. Bitcoin up 1,300, nowhere. Ethereum up 48, Palladium up 24, Platinum up 3 and change, gold, silver a little over 65 and a half. And grains are mixed with corn up a penny. All right, so here we go. Last night in the GoldFix PM post, we put a little bit of a comment about silver lease rates and the squeeze as paraphrasing work by Simon White on Zero Hedge. Silver continues to rally sharply while gold grinds higher, and lease rates explain why. According to the analysis, gold lease rates have turned negative, signaling easing physical stress, while silver lease rates are rising again, indicating tightening supply. Strong COMEX silver deliveries, persistent warehouse drawdowns, and renewed willingness to sacrifice dollar yield to secure metal all point to a more acute physical shortage in silver. The divergence suggests structural stress as opposed to speculative excess. That is what's driving silver's outperformance. Now, a quick comment about lease rates. The chart that you're looking at there, the top right-hand side might be too small on your screen, but this is what we have right now. Lease rates are nowhere near as high as they were before. Okay, so you may be saying, well, lease rates aren't really telling me that we're in a short squeeze. No, lease rates predict a short squeeze. Lease rates go up before price goes up if it's a physical price. So when you look at the market and you say, well, if it's not really a high lease, why is silver 65, 66, $67? That's because there is no metal. So the squeeze isn't over. Look at it like we're in a chronic supply shortage that's going to have flare-ups every so often. So it's a rolling squeeze, as we opined last week. And now, because the market's aware of it, it doesn't take much to get the market freaking out a little bit more, which means it's going to be spoofed higher probably going forward. Anyway, that went out yesterday. At the end of the day, we had like 7 stories yesterday, so we had to put that one on the back end. And you can get that in the GoldFix PM. Today, in the GoldFix PM, we're going to break down a report by Albert Edwards. SocGen is talking about recession, and in that context, I think they're picking up where the BIS. Remember, you may remember last week the BIS put out a post saying that gold and stocks are in a bubble. He's picking up where that left off, and he asks if precious metals are revving up for a 1980s style blow off top. And his conclusion, spoiler alert, is no, they're not. And he goes through various reasons pushing back on the BIS assessment. It's a good piece, and he writes very well. But we don't write as well as him. So but there's some good quotes in there, JP Morgan, et cetera, et cetera. It's a nice little piece. News and analysis. This is what we put out yesterday. CPI prep, supposed to come in pretty much steady, but maybe a little bit higher because of maybe tariffs are starting to have a little bit of an effect. Anyway, there's really not, I mean, there's a lot going on here, right? Okay, but we've talked about all of it ad nauseum. So let's move on. Data on deck, that's CPI, tomorrow's existing home sales. We do want to just fill the gap here because we've all had at least I've had my head buried in metals for the last 6 months. So time to start looking at regular news again. So these three stories, I think, are important in the context of the whole economy and whether we're spending or not. Uh, I think one of the phrases Albert Edwards uses when he's talking about if gold's in a bubble or not, he talks about the economy as being fiscally incontinent. So basically, they don't know how to stop spending. So with that phrase in mind, with that turn of phrase in mind, there are three stories we think that are relevant. Trump defends handling of the economy, announces military dividend. So he intends to give checks, not tax tax breaks. He intends to give checks to military personnel. He defended his economic record in a primetime address, unveiled a 1776 warrior dividend for around 1.45 million service members, and said he'll soon name a Fed chair who backs big rate cuts. Oh, that's the Wall Street Journal. The second story that we thought was interesting, that's interesting because they're just spending money. It's a chicken in every pot. Midterms are coming up. I guess he can't give $2,000 checks to everyone, but he can give them to soldiers. All right, number two, all that cheap Chinese stuff is now Europe's problem. U.S. tariffs on cheap Chinese imports have rerouted low-value goods into Europe, boosting Chinese e-commerce shipments and challenging European retailers and policymakers. That's interesting. So China is finding someone else to buy their low-end goods, their crap, the stuff that we buy. So let's see how that works out for Europe, trying to rebuild its economy when now they're just buying stuff from China. So we'll see how that works out. Trump says next Fed chair will back big rate cuts. Trump said he'll soon announce the next Jerome Powell successor as Fed chair, insisting the pick will strongly support lower interest rates to ease mortgages. Lower interest rates are not going to ease mortgages. I mean, they're going to make them back off a little bit, but they're not. You're going to have them. You're going to go back to the days of the 70s. Remember, Fed funds are here, but the prime rate is 9%. The prime rate is going to be something that people talk about again. Take a quick look at the charts. Daily charts, 10-year yields. 10-year yields have broken out technically of a downtrend, but now they're possibly back in it depending on where you draw the line. So keep in mind that the QE or not QE that Powell is doing is QE, and it's because it's all about the 10-year bonds. It's not about stocks. It's about the 10-year bond. And apparently, according to Zero Hedge, and I'm laughing because here we go again. They assert that the bailout or the easy money is to rescue once again JP Morgan, the systemic bank that's too big to fail, that keeps saying, well, if I'm too big to fail, I'll just be stupid with my money. And that's what they're doing. The Fed is, I haven't read the whole story yet, but I'm familiar with it from 2019 when they covered it initially. They covered it well and no one believed them, but that was right. So it's always JP Morgan behind the curtain. No matter what market it is, right? Bonds, metals, who knows? But that's the 10-year yield. The dollar looks like it's in a range. Could work its way down to 96.5, but I don't see it right now. S&P 500, it's always the S&P 500, right? I mean, there it is. I mean, that's a market that's been topping for 5 years. NASDAQ, but below moving averages now, right? So now you're looking at people that are probably going to be looking, trapped longs will look to sell strength as the moving average is approached. The VIX never stays up, but it's basing at much higher levels than it used to be. This used to base at like 12 and 13. Gold, there's your trend. There's your panic. There's your trend. There's your trend. It's right there. Nothing to worry about there. Knock on wood. Here's your trend in silver. There's your get ahead with gold. There's your silver all by itself. Copper, this is a very volatile, going nowhere thing. I asserted a couple weeks ago that when we get enough copper cathodes in, Trump's probably going to throw the tariffs up again. And Goldman has a report out to that effect today, so I'm going to take a look at that. No, it's quite possible that copper will be tariffed to the point where it spikes a lot higher. But until then, just something to keep in mind. WTI cannot get out of its own way. Uh, Natural gas, yeah, that's an echo. I wouldn't call that anything to worry about. Bitcoin, Bitcoin is the new gold. It's just it sells off even when it rallies. Ethereum, palladium, that's interesting. Okay, so it looks to me like there may not be a squeeze in palladium or platinum yet, but if you're getting killed in silver and your boss taps you on the shoulder and says, "Hey, Joe, aren't you short palladium too?" Yeah, cover it. That's what's happening right now. Platinum, I think there is a problem right now. Gold, silver, 65. That's great. We're a long way from 90 when we called this, or when we handicap this. Let's just say that. And grains. We're not going to cover the grains right now. All right. I'm Vince. Have a great day.